Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily Midday Market Minute. Stagflation. You have stagflation fears out there, and it's sending the market lower off session highs. 4407 and the S&P was tested perfectly. That's key resistance. Price action did not quite get to rare major 4-star resistance for a retest. All those levels are detailed in the Morning Express, and as we move lower, we're now moving into major 3-star support. Let's call it 4355. Good area of pocket of support down there. We have a number of shelves that we said in the Morning Express, because the quickness of this rebound over the last week and a half, we have levels that are technical, as well as these volume pockets where the market had moved from an opening bell or a closing bell intraday. So there's a number of shelves. You're going to key off of those upon further weakness. They're all in there in the Morning Express, from the S&P as well as the Nasdaq. Layers of major 3-star support you want to keep an eye on, but we start closing below some of those, you see the selling pick up. For now, 43.55. That's a big area. 43.54 to 43.59 to be exact. That's a big area of support. You don't want to see that break below there, or selling will pick up into the close. But so far we're holding, and in that market can consolidate back, and you have a pivot point of balance for the Nasdaq. Our pivot point of balance is 14,750 in the morning. That seems to be holding the early wave of weakness right now, but continued weakness will take it again down to those shelves of major 3-star support. So look at all those detailed on the Morning Express. Now for crude oil, we got above $82. We fell back, and then a retest didn't quite get there. You saw the White House put out a note saying that they are leaning on OPEC to stabilize the market, meaning bring back added supply. But we noted in the Morning Express today that some participants in OPEC are having a difficult time adding supply, and you're seeing over-compliance. But at the same note, they want higher prices. They're getting good returns. They're getting great dividends on their investments that they've made in recent years. So, they're not going to be too quick to bring back this added supply, at least, in the next month or two. So we remain very bullish, but we did also note that you want to start capitalizing on this strength here today. So hope you did if you've been following us. Now gold and silver, very disappointing day on Friday for gold as it moved higher. Stagflation should be a good narrative for it, but you got the rates are rising, and that's, as inflation's picking up. You got crude oil higher, you got other commodities, coffee, sugar, cotton, all moving higher and creating this inflation narrative, supply chain bottlenecks, and that's pushing rates higher, as we're also waiting for the Fed to potentially announce a taper. Wage growth was strong on Friday. So all of this, tailwind to rates, putting treasuries prices lower, and that's dragging gold as well. So for now, consolidating, holding support, but a little bit of wave of strength in gold and silver this morning could not so far follow through. China's back from Golden Week, and I've noted it here in the Morning Express every day last week. See if we can't get any buying from China that can help get this thing out of the gutter and start getting it out above some resistance levels. So far, a failure against the 50-day moving average on gold on Friday is what we have here to look at, and we need to get this market above 1783 to invite added buying. What you don't want is a move below 1745 area, and that would probably pick up selling to the recent lows. Give us a call. We're here to help with anything on the board. 312-278-0500. Remember, though, futures trading involves substantial risk of loss, and it's not suitable for all investors.